Today I'm going to show you how you can master the support and resistance in the Forex markets. Now for me, there are three types of sort of support and resistance in the market. Support and resistance, supply and demand as well, pretty much the same thing. So the three types for me, or number one is we have the sort of trend continuation levels of support and resistance, and that would look like if the market was in, let's say, an upward trend here. When price breaks the previous high, that area there would become what was a resistance point would then become a potential support point. Okay, how that looks in a downward trend, that if price makes a new lower low, that low there could act as resistance to the downside. Okay, the other is almost based off a reversal in the market. So let's say the market has been moving to the upside, it then breaks to the downside and then tries to rally back higher. You have this kind of level of resistance here where we've had a significant area of resistance in the past, and then the market could find resistance here. Vice versa with support. Let's say the support down in this area through here where there was strong buying in the past. Okay, now the third comes down to a range. Okay, so the market is in a range, it's trading between two very clear points in the market, and we can see that there's clear support and resistance in that particular move. Okay, and there's some good examples here that I'm going to show you on cable in a moment, but those for me are the three types of support and resistance that you really want to focus in on when you are looking at trading the markets. But what the conditions are around them are also as important as identifying the support and resistance levels. As you can see, I'm talking here about this one here being trend based, so the trend in the market is very important. This one is more based on reversals in the market, and that one is a range. Okay, so there's three different types of market conditions that come along with the support and resistance. Let's have a look at a couple of examples here, for instance. So we have a short-term trend out of the market within this period, and this can go with number one. Okay, so number one is we're identifying the sort of trend based support and resistance. So if the market here, for instance, is in that upward trend, I want to try and identify that when markets break out of a high, that is an area that could then be used as support in the future. Good example of this is right down in here. So the market was in a trading range, which we'll come on to. It then breaches this high and makes a new high. It then pulls back and then creates a higher high. Okay, so we have a high in here, we have a higher high in here, we have a consecutive higher low. So you have that kind of 1, 2, 3 move. That is then indicative that there could be a bullish trend about to appear in the market. Okay, and this works on all time frames. Okay, doesn't matter what time frame you're on, this works on all time frames. So you can see that the market has made the new higher high, so there's a condition that the new higher low could form at the previous high. Okay, so you can see here that would be in and around that previous high just through there. So what we're basically looking at is the fact that the market came into this point, it did find resistance, buyers turned into sellers, price pushed to the downside. However, the market then rallied through that area. Now the condition around this is sort of like if sellers have got aggressive in and around this high already, then they might start to panic as price starts to push through to the upside. Okay, so let's say that we entered a short here. Okay, where is the most logical place for us to take profit again if we are wrong on this market? Well, it's around that break-even point. It's around where that previous resistance was. So if price came back into this area, the reason why this could become support is because those sellers that are trapped are now exiting their positions. Okay, they want to get out. They don't think that the market is going to continue to the downside in line with their bias. So the best thing to do is get out at break-even. So they exit in and around these key swing highs. That then creates buying pressure in the markets, and you can see the market takes off to the upside. Very similarly here, we have a high that forms, the market comes back into that previous high, we see a rally in the market. Okay, now the momentum has started to fade, we're starting to see something different potentially develop here on cable. But that is the first scenario. You've got a trend in the market, you're looking at the higher highs and higher lows, and you're identifying that when a high gets broken, is that an area of support for price. Okay, So that is the first one. The second one is structure highs leading to a reversal. Okay, and now you can start to incorporate a little bit more advanced techniques in this. That could be multiple time frame analysis as well. You don't have to, obviously. I think it does help that if you have a higher time frame perspective, it can help you on your lower time frames. But we're on a daily chart here, and we can see that obviously cable has come up into these previous structure highs here. It's tried to make a new high and it's rejected. This is another form of resistance in the market. Now these tend to form though at levels of key support and resistance if we look left. Okay, so I'm going to go to a higher time frame just to help me with this particular example here, because what I want to show you is that where there was an area of developing highs on the weekly, it then led to an area of resistance on the daily chart. Okay, so one thing I would like to particularly do is use zones. Okay, I like to highlight areas where there's been wicks and candle bodies in the market, and I can see that when the market found resistance up here, we pushed lower, we then kind of moved sideways. If we kind of think about it, in the past it was like a head and shoulders pattern as well, which is a sort of reversal setup move here. The market has then continued to push lower. Now we're back in this area here. The market is finding resistance again, so it's starting to find a little bit of resistance back at this weekly level of resistance in the past. So if I go back to that daily time frame, this is where we can start to incorporate more reversal situations in the market. You identify higher time frame levels of support and resistance, and then you use your lower time frames to see if there is any kind of form of a reversal forming in here. Now I can see obviously the market was in a bullish trend at the time. We then rallied, we tried to make a new high in here, we then tried to make another new high. But what you can see consecutively happening here is that the highs aren't getting as strong as before. If we look at the trend based situation, the market was making very strong higher highs and higher lows. That's not happening anymore. So this is a sign of support and resistance at a reversal point in the market using a higher time frame. We can then see the market forms a very common reversal pattern, which is the double top pattern, and you can see that since then the market has started to decline. So the second form of support and resistance trading is your higher time frame reversal points. Okay, and that's definitely one that we can see here. Now the final one is going to be the ranges in the market, and I can see that we did form a little bit of a tight trading range through here. I'm actually going to go to a 4-hour time frame just to kind of highlight this in a little bit more detail for us, because ranges are super important in the market. Okay, they're very important in trading. Okay, I actually might go and find a little bit of a better example, and there is a better example on dollar CAD. So we're actually going to move down to dollar CAD because this one is potentially in play at this current moment in time. Okay, so this is the daily chart, and we can see that price has clearly formed a range. The market is moving sideways here. We can see that there is no sort of defined trend from one side of the screen to the other. You know, usually if we're in a downward trend, you see it from the top left to the bottom right, or if you're in an upward trend, you see it from bottom left to top right of your screen. You don't have that here. It's very clean, very defined range in the market. In particular on dollar CAD, I like to highlight those ranges on the higher time frame again. So I've highlighted 139 and I've highlighted 131.75. You can see that we've had multiple touches in and around this zone, and most recently we're getting another touch. You can see here resistance through there, very clear and defined. Now some basic rules that come with ranges is that you want to be a seller at the high of the range, you want to be a buyer at the low of the range. Okay, and you can see in fact price recently came into the low of the range here and has started to push to the upside. So that's how you can use support and resistance in your trading, and that's how you can master support and resistance. First, identify maybe the condition of the market. So let's say we put it into a couple of different steps. Step one, identify the condition of the market. Are you in a range? Are you in a trend? Or are you in a point where you think that the market could potentially reverse? That could come down to other factors, maybe even things like strength and weakness, for instance. Then it's identify those clear defined support and resistance levels. So if you're in a trending market, it's a break of a high, retest of that high, or on a downward trend, a retest of a low. If you're looking at reversal points, you're looking at the key sort of areas where the market has had significant change recently, okay? Or looking at your higher time frames like the weekly chart and the daily chart to then identify reversal positions on your lower time frames. And finally, you have the range, okay? So hopefully you enjoyed that video. Hopefully this will help you to master your support and resistance in your trading, and I'll speak to you in the next one.